The average American household wastes over 30% of its monthly budget on expenses it never consciously chose to keep. Not on lattes, not on avocado toast, on the big boring automatic stuff that runs quietly in the background while most budgeting advice points you somewhere else entirely. Here's the problem with most frugal living tips. They feel productive. You clip a coupon, you skip a coffee, you cancel a streaming service, and you get that small win. But the math rarely follows. Those cuts might save you $20 or $30 a month while your insurance, your subscriptions, your interest rates, and your utility plans are costing you hundreds more than they should, unchallenged, month after month. This episode is about the difference between frugal moves that actually shift your financial picture and the ones that just make you feel like you're doing something. We are going to look at where real savings tend to hide, why the high-impact areas get ignored, and what it actually looks like to audit the expenses that move the needle. The question is simple. If you only had the energy to cut costs in a few places, which ones would actually matter? Frugal living at its core is just a system for making sure your spending reflects what actually matters to you, rather than what is simply easiest to spend on in the moment. The mechanism is straightforward. You identify where your money goes, compare that against the impact each expense has on your life, and then cut or reduce the low-impact costs so you can protect or redirect the high-impact ones. The tricky part is that most people start with what is visible. You see the coffee, the streaming app, the lunch out, and those feel like obvious targets. But the expenses that move the needle on a real budget are usually the ones you set up once and never look at again. Things like insurance premiums, subscription bundles, rent relative to income, and interest rates on debt. These costs repeat every single month, often for years, without ever asking for your attention. So the system works best when you treat your recurring fixed costs as the first category to audit, not the last. A single reduction in a monthly bill compounds across 12 months automatically. That is the core logic. Frequency times impact, not just the size of any one purchase. The reason this pattern is so common comes down to a concept called the pain of paying. When you hand over money for something small and visible, like a coffee or a subscription you forgot about, the purchase feels concrete and immediate. Cutting it feels like a win you can see. But large recurring costs, your rent, your insurance premiums, your car payment, those get processed differently. Behavioral economists call this mental accounting. We tend to file big fixed expenses into a separate mental category, treat them as settled facts, and stop questioning them. They feel permanent, almost invisible, precisely because they are so large and so automatic. There is also a timing effect at work. Present bias means we give much more weight to decisions that feel relevant right now. Canceling a $5 app feels urgent and satisfying today. Renegotiating your car insurance feels abstract and distant, even though the payoff is 10 times larger. So the frugal living advice that gets shared the most is not the advice that saves you the most money. It is the advice that produces the most immediate sense of control. That is a real psychological reward. But it is not the same thing as a real financial result. Once you understand that gap, you can start directing your energy toward the choices that actually close it. So here's where the rubber meets the road. This week, you're going to audit the 3 expense categories that almost always hide the biggest savings: housing, insurance, and subscriptions. Start with housing. Pull up your lease or mortgage statement and write down your total monthly cost. Then spend 10 minutes on one rental listing site or a mortgage rate comparison tool and note what comparable options are going for right now. You're not committing to anything. You're just getting a number on paper. That number either confirms you're in good shape or it opens a real conversation worth having. Next, insurance. Grab your most recent premium notices for auto and renters or homeowners coverage. Call one competing provider and ask for a quote on identical coverage. Most people have not done this in over 2 years, and rates shift constantly. A single phone call has saved people hundreds of dollars annually. Not because they switched, but because their current provider match the new quote when asked. So here's the rule that holds all of this together. Sort your expenses by size, not by effort. That one shift changes everything. Most people audit their budget by asking what is easiest to cut. And that is exactly why they end up obsessing over coffee and ignoring their insurance bill. Effort and impact are almost never in the same place. Before you touch anything, pull up 3 to 6 months of bank and card statements and rank your recurring costs from largest to smallest. Do not skip the annual ones. Subscriptions billed once a year, insurance premiums, membership fees, they get forgotten precisely because they are invisible most months. And that invisibility is what makes them so expensive over time. Once you have that ranked list, your job is simple. Spend your energy from the top down. A 10% reduction on a large fixed expense will almost always outperform eliminating 10 small ones entirely. If you have already watched episode 3 in this series on the fixed versus variable expense split, this is where that framework pays off directly. Knowing which costs are truly fixed and which only feel fixed is what lets you know where negotiating or switching is even possible. Get the list sorted first. Everything else follows from that. To make this concrete, consider two people, Maya and Jordan. Same job, same take-home pay of $4,200 a month. Same basic lifestyle. Maya cuts back on coffee shop visits, cancels a streaming service, and clips digital coupons. She saves around $40 a month doing this. It takes real effort, and she notices it every day. Jordan spends one afternoon auditing 3 recurring costs: car insurance, her internet plan, and her phone bill. She calls her insurer, finds a comparable policy for $60 less per month, switches internet providers during a promotional period, and saves $35, and moves to a lower phone tier she honestly never exceeded anyway for another $25 in savings. Jordan saves $120 a month every month, automatically, without thinking about it again. Over 12 months, Maya has saved $480. Jordan has saved $1,440 with far less daily friction. This is an illustrative example, not a real study. But the math it reflects is real. The boring one-time audit consistently outperforms the daily discipline approach, simply because the savings are larger and they compound without any ongoing willpower required. Now, even when people know this, they still find ways to undermine it. Here are 3 common ones to watch for. The first is what you could call audit theater. You sit down, you look at your subscriptions, you cancel one, and you feel done. But the real money is in insurance premiums, loan terms, and utility contracts, none of which you ever opened. One cancellation does not count as a full audit. The second is swapping small cuts for big negotiations. Someone will stop buying coffee out, save $30 a month, and call it a win while their car insurance sits $200 higher than a competitor would charge them. The effort went to the wrong place entirely. The third is one-and-done thinking. You refinance a loan or renegotiate a bill, lock in a better rate, and never look again. But rates change, your situation changes, and a deal that was great 2 years ago might not be competitive today. These categories need a revisit at least once a year. The pattern in all 3 is the same. The visible action feels like progress, but the recurring cost keeps running in the background untouched. Now, a fair question here is whether any of this actually works if money is already tight and you have no room to negotiate or switch providers. The short answer is yes, but the results are slower and the order matters more. If your income is genuinely stretched, the priority shifts. You are not hunting for luxury cuts. You are looking at which recurring bills have any flexibility at all, even partial. A lower internet tier, a shared streaming plan, a different insurance deductible. None of those feel exciting, but each one compounds over 12 months in a way that skipping a coffee never does. The real downside worth naming is this: auditing your recurring costs takes time, and sometimes a phone call you have to psych yourself up for. It is not passive. Some negotiations fail. Some providers will not budge. That is normal, and it does not mean the system is broken. What the data consistently shows is that households at every income level tend to overpay on 2 or 3 recurring line items simply because they were never reviewed after setup. Finding even one of those is worth more than a full year of small daily cuts. So the tool you actually need is a list, your bank statement, and about 30 minutes. No app required. So here's where frugal living tips actually fit inside a working budget system. Small cuts are fine, but they are support players. The real leverage is in your fixed and recurring costs, the ones you set up once and mostly forget about. That is where this episode lives inside the Budgeting System series, sitting right between the episode on zero-based budgeting and what is coming next. Your one action for this week: pull up your last 2 bank statements and highlight every recurring charge. No judgment yet, just find them. You may be surprised how many are there and how much they total when you add them up. Next episode is called Subscription Audits, a step-by-step system, and it picks up exactly where we are leaving off. You will get a repeatable process for reviewing every recurring cost, deciding what stays, and cutting the rest without guessing. If this series is helping you build a budget that actually works, subscribe so you catch that one when it drops. Every episode in this series builds on the last, and the next one is worth the wait.